Hi all, welcome back to Invesfinc. Yesterday there was overall a consolidation in the major indices due to weekly expiry in Nifty. However, we noticed banking stocks had overall underperformed. So in today's video, we will unlock the key support and resistance zones for the major indices like Nifty, Sensex, Banknifty and FINNIFTY. We will also deep dive into the stocks that made headlines yesterday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue or how we might approach them in today's trade. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on Nifty. So Nifty overall opened flat in yesterday's trade. It tried to move higher beyond 24,850 levels. It did inch, but then there was a sell-off that came in and Nifty consolidated throughout the day without any major movements despite the weekly expiry. So we almost closed flat with just 0.08% downfall. But the major concern now is as long as Nifty do not cross beyond this 25,000 levels, we will not have a significant uprise that is expected. So for any further next leg of up move, we have to majorly first cross and trade above these zones, 25,000 level. Only then we can consider a kind of positive sentiment that is building up for the Nifty to move beyond these levels and move higher. Till then, we might consolidate overall. So for us, the major or key support is going to be around 24,500, from where we saw a significant recovery that came in. So as long as we take this support, we are going to trade in a narrow range of 24,500 till 25,000. Only once we cross 25,000 and start trading above, then we might expect a further leg of up move coming in. So till then, keep watching where the Nifty is headed and keep a strict stop loss for your shorts if Nifty crosses 25,000, and be open to maybe cut short your long positions in case if you see Nifty closing below 24,500 levels in the coming days. So this 500 point would be the range in which we are headed to trade. So this is a fresh new trade for the monthly expiry on Nifty. So let's see from open interest. So we cannot comment majorly anything on the open interest except the fact that at the higher levels of 25,000 we see call interest building that had happened here, and then at the very higher levels we see open interest built up around at 26,000 levels, so which is quite far from these levels. However, yes, the market players anticipate that at least for this 26 June monthly expiry, we are not headed to cross beyond 26,000. So considering that, the significant positions got added to the tune of around 40% in just yesterday's trade. So on the higher end, 26,000 is like a resistance for us, and then 24,000 is a support. And we are expected to trade in a range bound kind of scenario. As we discussed, 24,500 being the first support for us, and then 25,000 being the resistance. So in this 500 point range itself, we are going to trade. So once we cross 25,000 on higher side, we might see up move. And if we start trading below 24,500, we would start seeing selling pressure, and we have to cut down on all our longs and gauge where the Nifty is further headed to, whether we will have a significant downturn or we would have consolidation further in this range from 24,000 levels to 24,500. So surprisingly, the PCR in the very first day's trade for 26 June has been positive. So overall it is 1, and at the money it is trading 0.7, which is still positive. So this is majorly coming because of the at the money increase in the put rating. Now talking about Sensex, so Sensex also had similar kind of pattern, and there was overall movement of just 0.10% in yesterday's trade. So Sensex has also given a doji kind of pattern. So whenever you see this pattern, it signals the continuity of the trend, or at times we have also seen the revival. So we might see the downfall continuing in today's trade. So we have to remain cautious at these levels, 80,000 levels as a strong support for us. Else, if you start seeing we cross about 81,600 levels, which was the high of the previous day, then the positive sentiments might turn up, and we would approach 82,000 primarily. And beyond that, if we take a support, there are high possibilities that we could move ahead towards 82,500. So that remains our significant level, because we have stayed there, but we could not cross those levels and move ahead for next zone of around 83,000. So once 82,600 is crossed, only then the major long positions can be initiated, which suggests that further build up of positive momentum can continue from those levels. So till then, expect overall consolidation in the Sensex from 81,000 levels until 82,500. So this would be the range in which we would be trading for the expiry. From the perspective of open interest, so we already see sharp, open interest positions that got added at 81,500 odd levels. It is majorly from the call writers who are now on the winning side. However, a stiff support is being provided by the put writers too at 81,500. So this is going to be like a tug of war between the call writers and the put writers. So once we see movement beyond 81,500, we start losing that confidence from the call writers, and we might see huge unwinding that could come up, and the call writers could move at the higher levels of 82,000 and 82,500. And at 81,400 too, we see significant additions in the put writing that has happened. So we have at every 100 point some support that is coming in from the put writers. So quick downfall or a significant downfall from here on Sensex at least cannot be expected. But on the higher side, if we start moving, we do not have any strong support at these levels until 82,000. So let's see how the Sensex is expected to take a shape in today's trade. So PCR overall is positive with 0.8, and at the money PCR is also 0.75, which is significantly good. Now moving on to Banknifty. Banknifty in yesterday's trade opened flat to positive, but then it could not sustain. So for a major maybe first half it was good. In the second half we started seeing a selling pressure coming in on the overall banking stocks. That is when it gave a high again of 55,950 levels, which it tried crossing even yesterday, and in day before yesterday, and in yesterday's trade also it tried inching towards those levels, but could not cross 56,000 levels. And from there we saw a sharp downfall that came in, and we hit the low of 55,475 levels. Ultimately we closed above 55,500. So as long as 55,500 levels sustains on Bank Nifty, that should be considered positive, because we have been seeing from a very long time that with the initial monthly expiry positions that were initiated, from then 55,500 has been holding as a stiff support. So only once we cross or maybe trade lower below 55,500, that should be considered as a trigger, first trigger for us to wind up our positions on the longs. So till then, we might hover in this range of 56,000 levels, and once we cross 56,000 levels, expect the next leg of movement to come in 56,500 and 57,000 levels on the higher side. On the lower side, 55,000 would act as a strong support where the buyers can jump in. Else if we would have a downfall if beyond 55,000 levels breaking. So let's see from the perspective of open interest. So as we had mentioned, so 55,500 act as a strong support for us, and we see the put writers have been gaining based on the holdings of positions what they have at these levels. However, we also see at 56,000 levels we see a sharp positions that are still on hold. However, yesterday there was slight unwinding in the positions at 56,000 levels and additions on the call side. So this suggests that for the moment the call writers have the major hold at this level. Only if we start trading at these levels and stay for a day or two and cross beyond 56,000 levels, the unwinding on the calls can come only at that level. Else if we would trade in a range bound. So 56,000 levels is a resistance for us. So Bank Nifty can move up only after trading for a day or two at these levels. On the lower side, yes, 55,000 holds the significant support, and 55,500 levels, and at every 100 points also we have some open interest positions that are held from the put writers. So need not too much worry on the lower end. PCR overall stands at 0.7, which is positive. At the money is also 0.75, which is significantly good. Now lastly on FINNIFTY. So FINNIFTY also in fact opened flat to positive, tried moving up in yesterday's trading session and cross above 26,500 levels, but it did not sustain and we saw a sell off that came in at the higher levels, and ultimately we closed at 26,300 levels, around 0.38% downfall was seen. Now the expectation is, we have been telling that 26,200 acts as a strong support for us. As long as FINNIFTY trades above those levels, we need not too much worry, but it has to cross 26,600 levels primarily to uphold those longs. So only then the sentiments would remain positive and we can have that confidence in continuing the long positions for the next leg of up move until 27,000 levels. So in last two trading sessions, we have not been able to cross those levels. So now for the monthly expiry, we will see how maybe the FINNIFTY is expected to trade. But yes, overall, this would be the range for us, 26,000 levels to 26,600 levels, in which we are majorly headed to trade as a part of narrow or consolidation trade. In case if we cross beyond 26,600 levels, only then we might see the next leg of up move come in, and the supports will get broken once 26,000 levels are broken down on the lower side. Now from the perspective of open interest, so some significant positions have been unwinded at 26,000 levels. So if you could see the put writers, 26,500 levels. So if you see, the put writers have unwinded significant large quantity of positions at these level, and we see at 27,000 levels the call writers have added the positions, and at every higher level we see the open interest positions have been built up. So looking at this, maybe what I could sense is here the unwinding has happened, but the positions have still been held at 27,000 levels, and maybe some additions would have been done throughout these levels, okay, at every 100 levels. So we will wait for maybe another day's open interest, positions, how it is getting shaped. So here at 26,500 also we see slightly unwinding. So despite we are trading below 26,500, but a major action has happened at 26,500 strike alone. So we have to cross these levels for the positive momentum to come in and take a support at every 100 levels. So at 26 250 strike also we see a good open interest positions being held. Nothing got added though, but yeah. Uh, so a major action will happen only beyond 26,500 and on lower side 26,000 levels on FINNIFTY. So PCR is not so strong, so it is trading at 0.6, which is slightly neutral, and 0.7 at the money, which is slightly or mildly bullish. We can continue. Now, the next significant segment to discuss for us is the market participants, how they have behaved. So quickly, let's take a look. So FIIs on the index futures have been holding with their shorts to the tune of 97,000 contracts. So they are negative. On the index options, they have been continuing their positions as shorts. So from yesterday's trade, roughly 50% of the short positions have been unwinded. So gradually, FIIs are expected to turn positive, looking at how the index options have been traded. Proprietary traders, on the other hand, in index futures have mildly been taking their short positions, which is not significant at all. On index options, in fact, they have been continuing their long positions with 74,000 contracts overall in long. So yesterday they were almost like with nearly 97,000 contracts. So they have unwinded some long positions and still holding the longs with 75,000 contracts. Client or retailers, on the other hand, in index futures have cut short roughly 5,000 odd contracts, but still holding longs with 63,000 positions, which is positive. On index options, they have overall been in the shorts with 33,000 or 32,000 odd contracts. So no much action has been changed from yesterday's trade to today's trade. So overall, they are still holding that the markets are expected to turn down, and that is when they are continuing with their short positions on index options. On the cash market, no much major actions from the domestic institutional investors. Only 6 crores have been longs in the cash market, and similarly the FIIs have also bought 935 crores in the cash market. So both institutions have went long by buying the positions in the equities. So as long as no institutions go negative with the sell-off in positions, we are going to remain in a range-bound kind of scenario. Now, our last and very key segment is the trending or buzzing stocks in yesterday's trade. So first up is Tata Consumers. So Tata Consumers in fact saw a rise in yesterday's trade with 2.17% movement, and this major positive price came after the commentary coming in from the company's 62nd annual general meeting, which was held on June 18th. So the key takeaways from this meeting was the management statement that the company is expected to keep up its antennas for strategic acquisitions that are expected to be made. So this signaled a continued aggression on the growth strategy that resonates well with the investors. So management highlighted that their transformation into the future-ready FMCG powerhouse is expected, and they are emphasizing their focus on innovation, uh, with which they are expected to launch around 150 new products in next 5 years, and quadrupling of their direct distribution reach to over 2 million outlets in the span of 5 years. So this reinforces the growth story in the stock, which the analysts also remained positive, and gave a buy rating with target price of 1350 rupees. So that is when we saw a jump in yesterday's trading session, and this might continue because the management itself remains quite positive, and they, if they bring up based on whatever commentary they have done, and the work gets reinforced, that would lead to a strong positive sentiment in the stock. And if we start seeing the acquisitions also coming in, that would reiterate the management's commentary and would lead the stock towards the higher levels. So presently for us, the resistance stands at around 1170 levels. So once that gets crossed, we are headed for the next significant resistance of around 1230 on the higher end, and then we might move on the higher side further. So yes, two major hurdles for Tata Consumers. On the lower side, this zone remains the significant support from where we saw, in fact, in yesterday's trade, a sharp up move come in. So if this sustains, then we are headed for this next leg of rally. Next up is Cyient Limited. So in yesterday's trading session, we saw a significant drop of around 5% in Cyient. This majorly was because there was a negative sentiment sweeping across the entire Indian IT industry. And this downturn was a major reaction to the latest guidance from the US Federal Reserve, in which the Fed had kept the interest rates unchanged. And in its commentary, it had mentioned that as far as the revised rate cuts in 2026 and 2027, it is expected to go on a slower pace. So, as long as the interest rates remain higher for a longer period of time, that would act as a negative overall for the tech stocks spending in the North America. So, with this note, majority of the Nifty IT stocks underperform, and that is the reason the IT index also fell nearly 1% in yesterday's trading session, and with almost of the stocks being in negative except maybe for Wipro. So that is the reason even Cyient stock had underperformed, and this underperformance might continue from here on in the stock. So the resistance remains at 13,080 levels. If you see we crossing below beyond these levels, only then the long should be initiated. Else, if we can continue the downfall to continue with the near-term support of around 1130 levels. So that's it from our side on the trending stocks. So if you found this analysis valuable, don't forget to hit the like button and share it with your fellow traders. For all the pre-market report updates, make sure to subscribe to our channel and tap the bell icon. So you can also join with us by subscribing to our Twitter and Telegram channels, so that you are up to date on the markets. So thanks for watching, and we will see you in the next video.